Management Realty, a buyer's guide to buying a home. Buying a home can be very exciting and scary at the same time. Most first-time home buyers will experience a full range of emotions as they go through the buying process. This is a completely normal reaction. Homeownership is at an all-time high in America, but also because more and more people are realizing the benefits, such as credit. Having a mortgage that you pay on time every month improves your credit. Investment. Home values are constantly appreciating, which helps you build equity. This makes real estate a good investment. After 2 years of occupying your home as your homestead, you can make up to $250,000 as a single person or up to $500,000 as a married person in the sale of your home tax-free. Pride. There's nothing like the feeling of buying and owning your own home. Tax advantages. Interest on your home is tax deductible. With the Florida homestead exemption, you can reduce the taxable value of your home by as much as $50,000. It takes 3 things to buy a house: some cash, dependable income, and good credit. If you fall short in any of these areas, don't worry. There are plenty of programs out there to help achieve home ownership, no matter what your financial situation. We can connect you and guide you in the right direction. Getting started. Before you begin the process of buying a property or home, you need to consider the following. Determine your buying objectives. Why do you want to buy a home? Need more room? Downsizing? Tired of paying a monthly rent for nothing in return? Determine your needs. Prioritize what is most important to you in a home. Style of home, size of home, neighborhood, schools, cost, etc. Keep in mind there is a difference between what you need and what you want. So be realistic. Become informed. If you're a first-time home buyer, learn everything you can about the buying process. It is imperative you complete a buyer consultation to understand the buying process. This is where we set our expectations and have our hard conversations about the pros and cons of the buying process in today's market. Get your financing in order. This is not the time to make any major purchases on a credit card. Don't change types of work. More financing tips will be covered in the next section. Research the market with an experienced real estate agent that can go over the current market trends live. What is the available inventory in the city? How many homes are being sold monthly on average? What is the average price per square foot in the city? What does this tell us about the market? Agents. Here is where you pull out your computer or iPad and show them your skills. Teach them about the market. Knowing what you can afford. The first thing you need to decide is how much you can afford. Determining this early in the buying process will save you a lot of time and frustration. Not only will you have a clearer idea of the amount that you can spend, but you can also eliminate all those homes that are not in your range. If you have FHA financing, check your FHA lending limits in your area. You may even find that being pre-approved opens the door to a home you hadn't considered before. Financing. What's the difference between pre-qualification and pre-approval? Pre-qualification is a guesstimate of what a buyer might qualify for prior to actually submitting a mortgage application. Based on the unverified financial information you provide, the lender uses a quick calculation to arrive at a loan amount. Pre-approval means that the lender has verified your financial information and has actually committed money in your name for a specific loan type and amount. With today's technology, you can receive loan pre-approval in minutes. Getting a loan. By now, you should be well into your home search. If you haven't already been pre-approved for a loan, now's the time. Pre-approval lets you know in advance how much you can afford to spend. Gives you more negotiating power because you have financing in place and can save you money by locking in an interest rate early in the buying process. Getting a loan to buy a house is now easier than ever. You can actually receive loan approval in as little as 4 minutes. No money for a down payment? Poor credit? A first-time home buyer? No matter what your needs are, there are hundreds of loan products available to suit most financial situations. What type of loan is right for you? Find out about the down payment that's required, the interest rate, standard closing cost, and any extra fee the lender may charge and why. The possibility that your mortgage will be resold on the secondary market. Bridge loan. Should you sell your home first before buying a new one, or buy first and then sell? Most people need the equity in their current home to purchase a new one. But what if you sell first and don't have anywhere to go? A bridge loan may be an option. A bridge loan is a temporary loan that you obtain from your lender until the permanent one can be put in place. Once the primary mortgage is in place, the bridge loan is paid off and closed out. But understand that while waiting for a closing on your home, you will be making 2 mortgage payments. You will owe your present mortgage payment plus the payment on the bridge loan. Be certain you can afford it. Conventional mortgages. A conventional mortgage offers a fixed rate that typically comes in 10, 15, or 30-year loans. Although conventional loans used to require 20% down, most people today put 10% down. 68% of buyers today put less than 20% down. Just keep in mind, if you put less than 20% down, you'll be asked to carry private mortgage insurance, PMI. If you're a first-time home buyer, there are many low down payment loans available that ask for 3 to 10% down. Adjustable rate mortgages. Adjustable rate mortgages carry an interest rate that changes to keep pace with the current market rates. This is a good idea for buyers planning to stay in their home for a short time. If you plan to stay in the home for an extended period of time, you're better off locking in a fixed rate with a conventional loan. When deciding whether an ARM is right for you, determine the following. Will I be able to afford higher mortgage payments if interest rates go up? Will I be making other sizable purchases in the near future, such as a car or college? How long do I plan to own this home? FHA mortgages. Loans through the Federal Housing Administration, FHA, help low to moderate income home buyers purchase homes with low down payments, approximately 3%. You can use a gift or unsecured loan for the down payment and closing cost. Also, these loans are usually assumable, along with the current interest rate, by the next qualified homeowner when you sell your home, which is an added benefit when it comes time to sell. VA mortgages. Veteran affairs loans are great because they provide the opportunity to buy a home with no down payment. They are offered up to a predetermined loan amount, not more than $200,000, and are assumable by qualified buyers. To qualify for a VA loan, the veteran must be in active duty or have a discharge other than dishonorable, along with one of the following: 180 days active, not reserve duty between September 16, 1940 and September 7, 1990. 90 days service during a war, Korean, Vietnam, Persian Gulf, etc. 6 years service in the National Guard. Assumable mortgages. An assumable mortgage is a loan that stays with the property. It's simply transferred to the qualified home buyer. This means considerable savings for the next buyer. It may also include no points, no interest rate change, and low closing cost. Assumable mortgages are often the most valuable part of a property. FHA loans given before December 1st, 1986, and VA loans given before March 1st, 1988 are completely assumable to the qualified buyer. This means that you can take the loan along with the real estate just as it stands. Balloon mortgages. The balloon mortgage has a fixed rate for a certain time frame, typically 7 years, followed by a balloon payment requiring repayment of the entire home loan balance. Interest rates are generally lower than conventional loans, and people may choose this type of loan because they plan on either selling the home, paying it off, or refinancing before the balloon payment is due. If you put less than 20% down on a loan, you will likely have to pay PMI or private mortgage insurance. PMI protects the lender against a loss in the event of default by the borrower. You can ask your mortgage company to remove the PMI if you've paid 20% of the loan. However, you will be asked to provide an appraisal. Most lenders require you pay real estate taxes and insurance on a monthly basis. The cost is included in your monthly mortgage payment, placed in an escrow account, and paid out by your mortgage company. By securing financing, you are well on your way to your next home. Searching for a home. Okay, this is where the fun begins. Looking at homes for sale. Here are some tips. Become familiar with the area where you're considering buying in order to determine if it meets your needs. For example, near a park, shopping, public transportation, etc. Drive around, attend open houses, talk to friends and colleagues. You may want to select 2 or 3 neighborhoods to broaden your options. Where to find homes? Yard signs. Hit the pavement and drive around neighborhoods that interest you. Classified ads and homes magazines. Start reviewing your local newspaper and pick up a free homes magazine at your local grocery store. Internet. More than 80% of home buyers today begin their home search on the internet. Open houses. Check out the local newspaper and local real estate websites to identify open houses you'd like to attend. Regardless of where you find the home, we can help you have a successful transaction. Consider the following. This will help you stay organized and remember what you've seen. Goals. Why are you buying a home? Features. What you need versus what you want. Location. Is it close to work, in a particular school district, near shopping, etc.? Style. What type of home fits your needs, lifestyle, and taste? Lot. What is the size? What does it feature or face? Wooded, fenced in, etc. General condition. Is it in good shape? Will you have the necessary funds to repair the home if not? Neighbors. Try to get an idea of what kind of neighbors you'll have. Taxes. Verify taxes and any current assessments on the home you're considering buying. Making an offer. Before you make a formal offer, you need to make sure the house is priced correctly. You don't want to overpay. Typically used when selling a home, a comparable market analysis, CMA, lists the recent sale information of nearby homes, including how long each home stayed on the market, how close the asking price was to the actual sales price, etc. It then compares the information regarding these houses with the one in question. Agents. Here's where you do a CMA of the home they love live. As you go through this buying process, remember that everything is negotiable and everything should be in writing. You should be very specific when you prepare your purchase offer, and the seller should be equally specific when they issue their counter offer. Don't forget to think ahead in terms of the top price you're willing to pay. It's a very emotional time, and making some decisions early on is a good idea. Before making the offer, we suggest walking the home with your pro Management Realty real estate professional to check the bones, HVAC, plumbing, electrical, structural, roofing, and make sure you can live with the conditions prior to hiring a home inspector and spending precious funds. What is the contract contingent on? Home inspection. To make sure you have an out written into the contract if the inspection turns up major repair problems that cannot be resolved with the seller. Financing. Make sure the contract includes an out in the event you cannot secure financing. Appraisal. The contract should be contingent on appraisal. If the property doesn't appraise, the bank will only lend up to an appraised value. The rest would have to be incurred by the buyer as additional cash down. Earnest money is consideration. It proves to the sellers that you're serious. After all, they're going to have to take their home off the market on your behalf. Earnest money is typically between 1 to 5% of the purchase price, but less is possible. The money should be held by an attorney or title company in escrow. Never give the money directly to the house seller. Such a deposit does not mean you're bound to the contract. Your full deposit is credited towards the down payment and closing cost. Once your offer is accepted, it becomes a binding contract, so be sure to follow timely on the necessary contingencies. Contingencies are the clauses we discussed that, if not met, will render the contract null and void. Common contingencies are the sale being subject to approved financing, appraisal, home inspection, or the sale of an existing home. Home inspections. You've made your offer. Now you need to have an expert verify what you see is what you're buying. A formal inspection determines if anything needs to be repaired or replaced. Your Management Realty real estate professional will arrange the inspection for you. Licensed home inspectors inspect homes to determine if anything needs repairing or replacing. Typical inspections may include plumbing, checks for leaks, dripping faucets, toilet tank leaks, etc. Electrical, is it up to code? Checks that all light switches and wall sockets are working properly. Structural, settling cracks, paint peeling. Interior, signs of leaks in walls or ceiling, structure, and general condition. Roofing, checks for leaks or damage. Windows, good condition and sealed. Insulation, up to code. Appliances, checks that they work along with heating and air conditioning units. Additional inspections at additional costs are termites, signs of termites in the home or foundation. Radon gas, an odorless and colorless gas that is sometimes found in the earth's rock and soil. Lead-based paint. Some older homes may still have lead-based paint that can be hazardous if ingested, 1979 or older. Asbestos. Homes built in the early 1970s and before often had asbestos tile floors and asbestos ceiling tiles. This substance poses a health risk and must be removed. The home inspector will write up an inspection report with all minor and major defects itemized. Good inspectors will find minor flaws in nearly any home. It's up to you to decide how important they are. It is also helpful to be present during the inspection. Inspectors often provide you tips on the maintenance and upkeep of the home and its systems. Now that the inspection is done, it's time to move into the title and closing phase. Understanding title insurance, appraisal, and homeowners insurance. Some people can get confused about this area of the real estate transaction, but with a little knowledge and guidance, it's easy to understand, and we'll break down the basics for you. Title insurance. When you buy a home, a title company examines the chain of titles, previous owners, to ensure that there are no problems with obtaining clear title to the property. Parties other than the current owner of the home may have rights to it for things such as mortgages, liens due to unpaid taxes, lien claims to those who the owner owes money, etc. As a new owner, you may know nothing about these risks, but you are still vulnerable to such claims on your property. A deed is not sufficient protection. That's why title insurance is necessary. Home appraisal. Lenders require appraisals to confirm that the home for which they're providing you a loan is in fact worth the amount you're paying. Appraisers are independent agents normally hired by the lender. However, you may have a choice. The fees appraisers charge vary and are typically not built into your loan costs. Survey. Your lender may also require a survey that certifies the house is within the boundaries of the lot. The lender often selects the surveyor, but again, you may have a choice. The lender usually pays for the cost of an appraisal, then it's factored into the buyer's closing cost. Homeowners insurance. If you are not assuming the seller's homeowner's policy, you will need to buy your own. Title will not be transferred until you can prove you have the home covered by insurance. This protects you for things such as fire, flood, tornadoes, or any other damage to the home. You may also consider additional levels of insurance to cover natural disasters that are more prevalent in your area. Title escrow service. The escrow agent conducts the closing and is often affiliated with the title insurance company. Their job is to ensure the home buyers obtain a clean title. The lender obtains a good mortgage, that the costs of the transaction are paid, that the seller's mortgage is paid off, and that the seller receives their proceeds. The escrow agent prepares a closing statement that outlines what the required funds are, who's paying, and where the funds are going toward. Escrow and closing. The escrow agent conducts the closing and is often affiliated with the title insurance company. Their job is to ensure the buyer obtains a clean title, the lender obtains a good mortgage, that the cost of the transaction are paid, and the seller's mortgage is paid off, and that the seller receives their proceeds. The escrow agent prepares a closing statement that outlines what the required funds are, who's paying, and where the funds are going toward. They will not disperse funds until they can guarantee that the above noted items have been taken care of. Review the settlement statement with your Management Realty real estate professional prior to closing. Odds and ends, utilities. Water, gas, and electric meters will be read on the day of closing, and the seller will owe for the utility usage up until that day. You may also need to make deposits with both the water and electric companies. Service contracts. If you are taking over any service contracts from the home seller, you will owe the seller for the unused portion of those contracts that have been prepaid. These could include pest control, pool and/or lawn services, home maintenance contracts, etc. The check. The title escrow company you are using will tell you how much you need to bring to closing. Personal checks are not accepted, so bring a cashier's check or wire. Home warranty. It's highly recommended that you purchase a home warranty. This will cover the repair or replacement cost in case items such as appliances break down after you purchase the home. The peace of mind is worth the expense. There's nothing like the American dream of home ownership. The pride and stability you feel when you come home to a place that you know is yours is hard to describe. Our goal is to empower home buyers with easy-to-use information to ensure they make informed choices. We hope this guide provided you insight into and help with the home buying process. Management Realty, LLC. 15550 McGregor Boulevard, Suite 203, Fort Myers, Florida, 33908.